Friends, how are you? Igor Pechkovskyi is here with Windermere Bellevue Commons, your trusted real estate advisor in Seattle and the Eastside area. Today's video is going to be quite special. We have a lot of things, some changes, good information, stats, numbers, slides. I'm excited about today's video. We had been talking quite a lot about the shift in market, and that word shifting, I'd say the market had been reacting to 6% interest rates, which is a good thing. If we would not see any changes at all, that would be concerning. That would be a really kind of a bubble type of environment. But the market had been reacting to 6% interest rates, to stocks, and stock market falling, and I've got quite a few good slides for you today, a lot of good information, and I will also record another video right after this about the supply of housing in the United States, a lot of answers I wanted to bring to many questions I've received lately. So stay tuned, get your popcorn, watch this video until the end. We're gonna start with the east side. I see some changes, so let's just go to it and let's have fun. Friends, but before we start, I really wanna ask you to like this video and subscribe to this channel. It takes me quite some energy and time to plan, to find, to analyze, to bring you this information. So if you would subscribe, it would really help me to see some results that people actually enjoying it and find value in this. And please comment as well. So with no other ado, let's get into the east side and let me walk you through the latest numbers. So first things first, the east side. Let's talk about the inventory. As you could see, inventory had increased from 0.4 to 0.7 of a month, which is really, really good news. 0.7 of a month, before you start jumping on your stools, 0.7 of a month is still ridiculously low. To have a balanced market, I'm not talking about buyer's market, I'm talking about balanced market. We need to have at least 3 months of inventory. So we still have, if I'm good with math, we still have to get 5 times more inventory than we have to get to the balanced market. 0.7 of a month is still a seller's market, but it's at least provides us some glimpse of hope to get a little bit more inventory, and we'll talk more about that, why it's happening. So 0.7 of a month, great news. So the median price on the east side, $1,722,000. As we could see, it kind of flattened so far because we had the same 1.7 last month. So, but if we go to over asking, in April, 80% of residential sales sold over asking with 4 days average in the market. It will be very interesting to see how our May numbers would come up. But so far we have 80%, which is reduced activity from 85 in March. So April was a little bit slower, and median difference from the list price at 16%, which is still ridiculously high. But one of the reasons those numbers seems to me a little bit artificially bumped up, I started seeing listing agents put in, the asking price way lower, right? So they kind of hit the peak, and now to get to that peak and have still multiple offers, the asking price been dropped. So people come in and they see, oh, house in Bellevue, $1 million. Boom, let's get on it, let's bid it up. And still, those numbers are at 80%, which is very high, but it's lower than 85% that we had seen in March, which is good news for buyers. So to wrap up the east side, let's look at 3 more slides. One, I always talk about cost of waiting. So when you look at this, April 22 to April 21, the rate had changed from 3% to 4.98%, almost 5%. The reality is that today's high balance conventional is almost 6%. So this slide is again for April. In May that we have today, rates are almost at 6%, but the price had changed 1.3 mil to 1.7 mil over a year, which is a huge $3,000 a month change per month. That's insane. That's a lot to wait, right? Because the prices had jumped so much and interest rates jumped so much. But another side I want you to see, if we combine, and this is important, if we combine just 2022 and we look at the east side, so over the last fall and winter of last year, the prices would be rising. Then we get to January, 1.5. January to February, almost $200,000 increase in 1 month. That was insane, right? But then February 1.7, March 1.7, and April 1.722, which says the last couple of months the price had flattened out, which is a big deal, right? We at least see, prices go like this, and now we're getting leveled up. I do believe that most likely for the east side, we had peaked so far, and 6% interest rates definitely help with that. So another thing to add, if we go for homes sold above asking, we see that prices had flattened at 1.7 and above asking February 87%, March 85%, April 80%. So the demand been slowly dying off. I mean, 80% is an insane number, but it's still a little bit slower. So the question would be, would we see price reductions from here? I'm gonna at least try to answer that question in my next video when we're gonna talk about supply. But what we definitely could see, if you look at historic days on market, over here, 2021 comparing to 2022, if we take, for example, East Bellevue and West Bellevue and just focus on Bellevue, in 2022, in April, the average days on market were 6 days, and in West Bellevue, 15 days. But a year ago, those numbers were 13 days and 36 days. So if I look in a close future, I would say that on the east side and other areas, the days on market most likely would increase, right? So if houses were selling in 3 days, they will be selling in 6 days or 7 days or 10 days. That would be a very normal thing to see. And hopefully we will go and have more time to be making decisions just like we had in April of 2021, and houses on the east side were selling in 13 days on average rather than 6 days as we had in April. This is my update on east side. Let's look in Seattle. So Seattle market has surprised me a little bit. If we are talking about east side being at its peak, this is it. Seattle has actually been a little bit busier this month. Inventory is flat, 0.6 of a month. We look at the median price in Seattle now topping off $1 million, right? So we're gonna come back to that median in a second, but 1 million is a new number, which is relatively high. If we look at the months of April, over asking prices, so March, we had 71% of homes sold over asking, and in April, we had 74, so it actually more, rather than on the east side, we had a 5% decrease. Here we have 3% increase. Median difference from the list price, 16%. Average days on market, 5 days for the months of April. So Seattle is definitely having a good time and busier time. So if we look in Seattle and we compare the numbers year to date of 2022, if we've seen on the east side the slowdown moving backwards, look here, we have January, February, March, and April, the prices actually rose quite good. $790 in January, $925 in February. So east side had almost 200K increase in 1 month. We do have a 135,000 increase for Seattle, which is huge. Then continued to 970 in March, and we topped $1 million in April. So the market actually been quite strong, and activity 62%, 71, 74 over asking. Seattle surprised me a bit. So that's the update on Seattle. Let's look into Snohomish County and wrap this one up with a few more historical data points on interest rates and housing. So I don't cover too much. I cover geographically selling-wise Pierce and Snohomish County, but for our videos, we're just gonna touch briefly in Snohomish County. So inventory 0.6 of a month, a little increase, which is great, right? It's amazing. Again, we need not 0.6, we need 3 months of inventory, which we hadn't had. The 10-year average on the east side, 10-year average was 0.9 of a month. And that's the extreme seller's market. We need to have at least 3 months of inventory to have a balanced market. And in the next video, I'm going to talk about supply and why that was a thing, why it is the thing. But 0.6 of a month is definitely better than 0.4 in Snohomish. So a little bit more inventory. As you can see, the median price rose to $839,000, which is expensive. Very expensive compared to the last year. I do have clients that look for a home in Bethel with a budget of $850. It's been extremely challenging because it's just been extremely challenging. And if you look at over asking, same thing. Still, the market in Snohomish County is doing very well, 74% compared to 73% in March of homes that sold above asking, with the median difference price from the list price 13% is very strong. But now, our slides that I'm really in love with. Have a look. So friends, to wrap up this video, I want to zoom out a little bit because we looked very closely on the east side Seattle. Let's look on the national level. I'm a big believer in real estate. I am. Me and my wife, we keep buying houses. We look all around the country right now to see what other market looks like. But look, I want to show you this, how real estate done in gains over the last 40 years. Pause this because I'm not going to explain everything to not take too much of your time. So starting in 1982 all the way to 22, real estate did really good. In 2002 to 2012, houses went up from 171 to 238. If you put 20% down on that, which was $34,000, you made extra $67,000 on the money that you invested, which over the year per year, equal to 20%. That's a 20% annual return. 2012 to 2022, the market went bananas, right? So it increased from 238,000 to 428. That's 80% increase. And on the 20% down payment that you put in, which was $85,000, you made 40% on the annual basis on the money that you put in. The market will slow down, will speed up. I've been through this even in my career, which wasn't that long. In 2018, when people were calling me like, oh my God, Igor, the house is on the market for 10 days. What do I do? Well, got used to that it's going like this, but there are times when it goes like this. It could go a little bit back like that. And we're gonna answer why our supply was so low over these years in the next video. But I do believe that our real estate will keep performing pretty well, and we will see what numbers look like in May. To wrap up this video, same thing about the 30-year mortgage rates from 1971 to 2022. People forget that in 1981 or 82, the interest rates were at 18%. Can you believe buying something today at 18% interest rates? Unbelievable, right? But sometime in 2003, we did get under, it seems like 7%, and interest rates were slightly going down and down and down. And when COVID started, we hit the bottom at like 2.5%, 3% interest rates. But just not that long ago, in 2019, interest rates were at 5%. And everybody forgot about that like it never existed. 2019, not that long ago, interest rates were at 5%. Now they're around 6%. What's the big deal? So I just gonna leave you with this. This is our market update for the April. We'll see what the numbers look like in May. It was my pleasure as always. Please like, subscribe, leave me a comment. Igor Pechkovskyi, your trusted real estate advisor on the East Side and Seattle area. See you soon. Bye-bye.